Crypto cycles, why discipline matters more than excitement. Hello, good people. I'm Chris. Thanks for tuning in. So we finally endeavor into crypto. So let's get to it. I've been watching what's happening in crypto, and I want to speak carefully and responsibly. Crypto is highly cyclical, and many new participants don't understand the depth of those cycles. Crypto is not a straight line. Crypto moves rapidly expansions, right? Euphoric sentiment, all of the, when you get all excited, that euphoria in your mind begins to, it's not the only thing that creates that euphoric sentiment, but it's one of the things in life that does, right? Sharp downturns, sharp drawdowns. For example, last run-up season, if you don't understand what I'm talking about, that's okay. Last run-up season was 2020, right? 2020, Bitcoin new all-time highs in 2020 and 2021 because it would run up, hit it, pull back, run up, hit it, pull back. Following year, run up, pull back, run up, pull back. What was that new all-time high in 2020 and 2021? Bitcoin new all-time high in 2020 and 2021 was 68K. So once we entered into crypto winter, again, if you don't understand it, that's okay. But if you're in crypto, you need to understand what starts run-up season, Bitcoin halving. You can research that on your own and figure out what it is. I will eventually get around to talking about it again. And then, but in crypto winter, Bitcoin fell all the way from 68K to probably over the next 28 months. It fell as low as 15.9. Did not stay that long, maybe a week. And then eventually it was back up to 23, 25, et cetera, et cetera, et cetera. Then you had the Bitcoin halving in 2024. It was the last Friday in April, right? So the Bitcoin halving, that's HALVING. The Bitcoin halving kicks off every 4 years, but it's not exactly a 4-year time period. It's a numerical countdown that the system does, and it just comes up somewhere about every 4 years, give or take a few days or a few weeks or what have you. So anyway, I just wanted to show you how crypto pulled back, right? It pulled back from 68K to 15.9. And this new all-time high this run-up season, because the last Bitcoin halving was 2024. And then you have about a year to a year and a half, give or take, something like that, for run-up season, right? So somewhere we'll be going back into crypto winter soon. So anyway, Bitcoin new all-time highs this run-up season was what, 127K. And a couple of weeks ago, Bitcoin had pulled all the way back to 59K. Just showing you illustration of sharp drawdowns that crypto has. And so, if you can't handle that and you don't understand that, it might not be for you. Extended consolidation periods. Volatility feels exciting on the way up. And trust me, I'm very familiar with that excitement on the way up. Myself, I like the thrilling ride, right? And unbearable on the way down. I'm aware of that. I've had some of that. But I've had more good than I've had bad. So I'm okay with that. But you have to know yourself, you have to know yourself. You have to know what crypto you're messing with. If you don't know that Bitcoin is the number one crypto, if you don't know that Ethereum is the number 2 crypto, you might not be ready for crypto yet, right? Because if you're playing with crypto, there are over 20,000 cryptos most of the time, right? and only the top 200 is a safe risk. Everything else is bigger and bigger risk, right? And if you don't know how to figure out the ranking of the crypto, how to research that, if you don't understand run-up season and winter, then you need to be following somebody that's giving you crypto tips. Otherwise, you're going to be having some serious lessons to learn with crypto. Keep it moving, Christopher. What season participants do. Here's what they do to my knowledge. Without sounding like I'm predicting anything, experienced participants don't chase hype. They prepare capital. They build dry powder. They wait for sentiment resets. They scale in slowly. Preparation precedes participation. You've heard me say it a time or two before, but hopefully you get it down pat. Dry powder discipline. Don't rush interest. Nobody knew or had any clue, at least I didn't. I had no clue that Bitcoin was going to fall all the way down to 15.9. Did it hurt my feelings? Nope. Was I afraid to buy it? Nope. I understand the cycles and the seasons. Did I know it was going back to 68K? I was pretty certain that it was going back to 68K. Did I know it was going to 127K? Nope. But I had clues and evidence based on research that it was probably going between 115 to 125, right? So my plan was to buy it as it was falling slowly, some small increments, because I don't know how far it's gonna fall. So by the time it got down to 15.9, I already had 8,800 in it, and I only needed about close to another 8,800 to get my whole coin. Well, by the time I got the whole coin, it was not 15.9. It was back up to 25K. I was able, I lived with that. 25K up to 127K. Did I hold? What I did was took some profit. So when it pulls back, I could take advantage of it again. So that's what I did. You do what's best for you. You need your own strategy. You need your own goals, and go with that. So anyway, dry powder discipline. Don't rush entries. Build capital during uncertainty. Dollar cost average strategically. Size positions relative to volatility. That means pick your crypto wisely and choose your sizing wisely, and then stick to your discipline. Plan exit ways before entering. Do your research. Have a pretty good idea of what you're going to do with the crypto based on your entry point, right? So if you bought Bitcoin at 15.9, did you need to hold it to 127? Sure, 127 is a great ballpark to hit, but if your goal was to make, 5 times what you put in, 15.9 times 5, not even 100K. But if you have a great entry point, right, then you can make great money. Or if you're a serious crypto holder, then you buy it at a great price like 15 or 25, and you hold it for 10 years, because in 8 to 10 years it's expected to be $1 million. I'm not promising that to nobody, right? I'm just telling you what the expectations are, but you got to do your own research, and you got to come up with your own game plan and come up with your own exit plan, and be happy with your plans and your goals and your strategy, right? You can't worry about what somebody else is doing. Somebody else hold it to $1 million. You held it to 200,000, and you turn your whole life around. Okay. Maybe you didn't need $1 million to be happy in life. Do what works for you is basically what I'm saying. So you don't build wealth by catching peaks. You build wealth by surviving cycles, right? Okay, profit-taking philosophy. Hopefully, this could be good if you get some out of it. When gains come, Christopher, I don't assume infinity. I sell in waves, right? I already have done my research before I acquire it, and I have an idea of what is expected to do in run-up season, right? And I take and look at where I bought it, right? And I look at where it's expected to go. But that's only a hope. That's not certain, right? So I look at, well, if I bought it at this price, times 8 is here. If it hit that price, I'm going to sell 20%. If it go up to this price, I'm going to sell another 20%. If it goes up to this price, I'm going to sell another 20%. And then I'm going to hold out to see if it's going to hit that expected price or beyond. Now, I said my first sale wave was like times 5 times, 7 times, 8 times what I put in. So when I make that first sale, I've already have taken out my initial investment with profit. Hopefully somebody caught that. So my second wave, I'm still in profit, and it's profit on top of profit. That third wave, again, I'm still in profit, and it's profit on top of profit on top of profit, right? But you got to do what's best for you. I'm just giving you ideas, right? Okay, so I sell in waves. I rotate my profits. So what do I do with my profits? Do I just pull it all out and go have a good time on the town? No, what I do is I rotate my profits into Bitcoin, right? Bitcoin is the #1 crypto. I rotate some of my profits into Ethereum. Ethereum is the #2 crypto. I put some of my profits into my long-term equity positions. What am I talking about? My VTI, my VOO, or my Amazon, or my Apple, whatever I feel I need to do based on the opportunities that the market or I feel the market is presenting to me. Again, I'm just giving you ideas. I'm giving you some goals and some strategies. You got to figure out which one is best for you. Or, no, I got or, but really, and I maintain capital for swing trade opportunities, right? So that means the market always create opportunities. Let me say this again. The market always create opportunities. The opportunities we had back in April for Liberation Day, that entire week, the market was crashing, right? Insane clearance sale, right? I said it before. I got into Meta. I got into AppLovin. I got into QQQ. I got into some other things. And within 30 days, I was in profit. Nice profit, right? But if I don't routinely take profit from positions that are up nicely, which is something I learned from Larry Jones, right? I ain't taking all the credit. Larry Jones taught me some years ago, or he shared, that if you have positions where you're up bigly, whatever bigly is to you, he said bigly to him was 10K and up. Well, bigly to me was up 500 to 1,500, right? So if anything where I was up 1,500, I was taking his recommendation to take at least 20% out the table. Depends on how my position was up. If I got a position where I'm up 1,500, I'm gonna take probably 20, 30%. If I'm up 2,500, I'm probably gonna take 30 to 40%. If I'm up 5,500, I'm probably gonna take 30 to 50%, right? And I have some cash, I have some dry powder in my portfolio. So when the market starts to crash, I have cash to take advantage of the opportunities, right? You might say, well, how much? Look, the market crash, I think in April, I think I had 7,500 in cash, not in my pocket, in my portfolio, from routinely taking profits when I'm up bigly, right? And that 7,500 was gone like that. Now I got some good stuff. I mean, AppLovin, I think I got it at $2.99. $2.99 is like pennies, you know. I got in Meta at $5.99. You know, $600 is that's not like it's peanuts, right? So it was not long before I think I got in QQQ at like 5.10, 5.11, something like that. And then I got into some other things. but everything costed money, right? So my 7,500 was gone in the blink of an eye, but I had some good stuff. And in 30 days, I was a happy soldier. So, all right. So I maintain capital for swing trade opportunities, but you got to do what's best for you. To me, that's maturity, right? To you, it is what it is. So let's keep moving. The real goal, I'm 15 minutes in, I got to speed up. So the real goal, crypto is not the goal. Wealth growth is the goal. Wealth growth is always my goal. I'm trying to grow my wealth. Period, point blank, right? Using stock, using crypto, using property, using my job, using my side hustles, whatever means necessary. The bottom line is I'm trying to grow my wealth so I'll be able to take care of myself, my companion, so I can help my kids, so I can help my grandkids, my siblings, my parents. But I only have a mom at this point. My dad is going home with the Lord. So anyway, that's my goal. So I keep my eye on the main goal, right? So wealth growth is my goal. Crypto is just one of the tools within my structure. Stock is just one of the tools within my structure, right? So in closing, discipline and volatile markets separate participants from survivors. What are you going to be? Are you going to participate? Or are you going to be a survivor? I don't rush seasons. I respect cycles. I prepare before I participate. So with that being said, if you will, please hit that like, hit that subscribe, share it with somebody who can use it, and walk in wisdom, my friend.